Today, ladies and gentlemen, we're breaking down the $5,436 income from my dividend stock portfolio. We're going to look at the individual stocks, what ones are the best, what ones are the worst. So let's jump right into this. Welcome back to my passive income investment. Like today, we have the passive income moth. He's the little guy right up here that's going to help me analyze my stock dividend income today, guys, because I've realized I don't really specifically just look at the incomes, exactly how they're divided out between what companies, what ones pay me the most, what ones pay me the least. And it's going to be really fun, I think, just to look at how this entire thing breaks down in and of itself, just the income breakdown. So we're going to head on over to my computer, guys. We're going to take a look at this and show you exactly how this works.
Alrighty then, let's take a look at the three accounts here for you guys. We're going to start with the monthly month-over-month income here, starting with the year-to-date, guys, for what we're 8 months deep, I think here, 7-8 months deep into September now, Jesus. But taking a look here, guys, we've had $252 Canadian. That would be in the red. As you can see up here, it says cash and then reinvested. But I've reinvested most of the money. I've reinvested about $1,900. We can see at the bottom we have US, the top we have Canadian dollars. And coming into the month of September, we'll have to take a look at the stocks down here individually to see what ones are going to be paying out. But let's just take a look at the month over month for following October, November, and December. We can see here, guys, that I'll be making about 403 that'll get reinvested and then 192 US. So that's well around $650, $700 CAD. November is not nearly as good in this account, but we're still making about $100 and basically $67. And this will divide out as well. We'll see once we start looking into the other two accounts. I have 4 accounts, but we're only going to look over 3 today just to save on some headaches, because the last account I'm only making $30 off 3M, but I'll explain more about that in a little bit. But we can see here, guys, it kind of peters out toward the end of the year. I'm not really getting any huge income for November and December. Hopefully in the other accounts it'll make up for that. But just taking a quick peek here, we're going to look at the individual companies, starting with the Canadian companies in my tax-free savings account. Now I have all of these set up on drips. That's why it says reinvested income, and currently year over year I'll be reinvesting $2,000 into these 3 companies. So we can see here we have Northland Power. I'm going to start with the bottom because it's the utility. It's one of the first stocks I ever bought. It's my favorite. And you can see here, guys, that it also pays a monthly dividend down here. We can see that it's got... it's one of the few utilities that I actually pay monthly, which is what I love. But on top of that, guys, all of these Canadian companies are paying me pretty healthy dividends. But Northland Power pays me literally $50 a month, every month, in perpetuity, and I don't see that ending anytime soon, which is super awesome. Canadian Imperial Bank is one that I wish I was buying now, but I'm almost getting an even 5% yield or $800, which to me is a little over leveraged. Like I said, when Canadian Imperial Bank comes back a little more, I'd like to just pull a little bit out of it, leave the drip set up, but I just want some diversification, because I think that $800 might be a little high for the overall average of my portfolio. And I just, if you ever run into issues, you don't want one of your largest payers to cut that, in half or whatever happens, which to me is unlikely, but it's always a possibility you have to consider. And then my other bank, we got Bank of Nova Scotia, guys, paying me out the same much as Northland Power, but it pays quarterly as well. Moving into my U.S. holdings, my favorite U.S. holdings here. I absolutely love all of these companies. These are companies I'll probably take to the grave with me unless things change. But we're talking about Apple, obviously, because I'm holding this as a growth company. I still have an incredible dividend yield off this, making about 120 US at about 1.78%. I think the average yield on Apple is 1.2 or 3. Don't quote me on that, but I am getting an insanely good yield on cost for Apple, buying it at really good share prices, and I got about 6,000 US in there making me that money. And British American Tobacco is another one of my favorites that I recently bought. I actually sold Apple off, or a big chunk of Apple, because again it made up a huge position in my portfolio that I wasn't comfortable with. So I basically leveraged some of it into British American Tobacco in this account, along with Altria Group. We can see my Altria and my British are paying me about 7%, which are really awesome income for US, because they're both paying over $300, which we can see. And these are all quarterly payments, by the way, which I'm not the biggest fan of. I need to find a reach or something to give me some more monthly income. But like I said, when we look at the other accounts, you'll see how it kind of evens out a little bit. But GEO, my prison stock, absolutely love the prison stock. It's been beaten into the ground. I really wish I was buying it right now as well, but give or take, nonetheless, I'm still making $433 a year, which will be paid quarterly. Got a drip set up so I can start tapping into that 10% that's currently paying out. It's a down price. Still love it. I'm not in a rush to basically put money I'm working for into it, but I'm happy with the size of the position and the dividend that it brings in, because it is a REIT, so obviously it pays a higher yield. It's a high risk REIT and a very volatile REIT, but it's been around for a while. kind of believe in the prison system, and I'm hoping they can get those shit together because they've had some issues. It'd be nice to see them actually. I don't want to get into that's political stuff. Let's just leave that. That's for another video, another day, guys. But moving on down here, we're going to got Microsoft, which pretty much is kind of interesting because I hold almost the exact same amount of shares, or I mean position allocation, basically, because they're both paying me right around $110, $120, same exact yield at 1.78%. My two favorite companies for my tech sector, obviously Apple, Microsoft, and then we got Southern Company, my final utility, paying me up 5.61%, which is insane considering I think it pays out 4.7 or 4.8 as of today. So my yield on cost on this one is absolutely beautiful. I just wish I had more of it, and because it's up so high, I'm just using a drip to buy more shares instead of me paying out of pocket because I just think it's gone on way too much of a run. I'd like to see it come back. But let's take a look at some of the other accounts. So we're going to go into my managed account, which is my other filled account. I have to pay taxes on all this income, but here we can see we're actually making a lot more money. This really helps out because you can see for October I'm making an extra 115, and for November I'm making an extra 150. So if we go back to my other account here, we can definitely see that really brings the income up. So I mean, now for October we're making an extra $100, and now for November we're going to be making an extra $100. So that really changes the overall month-over-month income, which is really nice to see. But we can see in this account that a lot of this is going to be coming off probably British American Tobacco and MO, which we can see I'm getting big payouts from these companies, and I have huge positions in my managed account for these because now we can see the dividend yields are 580 and 450. But might I add, these are converted to Canadian dollars. Because I do not have this account set up for U.S. holdings, when I get paid dividends, I just get paid dividends that get converted to CAD. Whereas if we go back over to my other account here, guys, we can see that the U.S. holdings look like they're a lot less, but they're actually not. It's just because they're basically paid out in U.S. dollars. So $433 in U.S. converted to CAD will be probably GEO group. But that is same difference. You get what I'm saying. 433, or with Altria Group, guys, 336 converted to CAD would probably be somewhere closer to 450, and which we can see in this account is right around basically, that 450 mark. So anyways, we can see these dividend yields are muy bien. I'm getting a little bit more off British American Tobacco, bought it at a cheaper price in here. I am a little overexposed to the tobacco industry right now, but I still think it's on a big discount. I like the positions I have in it. I like the yields right now. I'm just going to hold on to it. Probably sometime before the end of this year, if the opportunity arises, I am going to sell a little bit of BTI out, but I'm just going to wait and see what happens with it. And then we can see Johnson & Johnson, new position. These companies I'm holding for stability in the portfolio. These are like tankers along with Starbucks. I think these companies, and 3M. Basically, 3M was a choice that you guys made. I make $38 in dividends off this account. Same with the other account. I make about $35. I have about 4 shares, I think, in the other account. So I'm making about $60. Pretty much the same all around off 3M and Johnson & Johnson. But the neat thing about these is they're like major companies. Obviously, Johnson & Johnson, I think, is the 5th largest company in the world. Don't quote me on that. It's somewhere in the top 10. I know that much. But I love it. It kind of follows in the drug sector as well. So I'm using it as basically a tanker, a moat to my entire portfolio. Along with 3M and Starbucks. I think those are companies that will give me a lot more stability in the volatile times. And again, because this is a dividend portfolio, I really would much rather have these dividend payments come in stably and try and have the least amount of volatility in the portfolio as possible. But I don't mind the volatility I have now. Actually, to be honest, I'd love to see it all drop, because if it drops, then I can start loading the boat, which means as I make income and as these dividends come in, they'll be buying shares cheaper, and those shares will be paying out higher dividends. So sorry, I'm letting my screen die out on me here. But let me take a look here real quick, guys, just to finish up. We're going to look at one more quick account, but we can see in this account, same with December, I'm not getting huge income. But finally, we'll just take a quick peek at the final account, which is the Vanguard Index Fund, just to show you guys how Vanguard pays out. I'm just using as a stable fund to basically buy real estate. Maybe it could be 5 or even 10 years from now, but I just want to use this account to defer some taxes today and hopefully being able to buy a piece of real estate at some point down the road. But anyways, just taking a quick look at the income here, guys, we can see that I'm not really making anything off of this until October, and in October it's really not paying a whole lot. The real income clearly won't start till about 2020, but in the meantime, guys, we can see the next we don't know when the next payout is in this one. Actually, it doesn't even tell me the next payout day. Probably hasn't been declared just yet. But VFV really stable, holding using it basically just to have exposure to the entire S&P 500, which is the 500 largest companies in the U.S. But this is in Canadian dollars. So VFV, if you check it out, guys, it's the same S&P index. It's just converted to CAD. So if you live in Canada, you can buy the same index without having to convert it to U.S. And I don't know why. I just think it's a little bit easier to deal with. No U.S. commissions, things of that nature. Makes it a little bit easier. I have no problem with that either. But I hope you guys took a quick peek and learned something here about my entire dividend income. It's kind of an interesting thing to be able to show you this, and I love the way Scotia iTrade kind of sets this up because it makes it a lot easier to understand.
If you enjoyed Passive Income, Financial Independence, Retire Early Journey, I hope you're on the same path, guys. You can watch me here as it all unfolds, whether it's inside the stock market or outside the stock market. So consider slapping a like if you guys enjoy this stuff. But quick video for you today on Monday, Labor Day. Markets are closed, but stay cool, stay awesome, guys. I look forward to chatting to you real soon.